weekend all. Ira Epstein with your agriculture update, your weekend edition for this June 14th, 2019. It's Friday, late in the day, after 4:30 coming around now. And as you can see, we have a market that in the grains are a weather market. It's a classic weather market where you'll drive up in it until you get to a top point, and then you'll spend probably a month or two retracing in the markets. That's typically what weather markets do. And no, I don't know where that top is yet in the market because weather markets don't ring the bell. They just happen. All of a sudden, you'll see your 10-day forecast on a Sunday night and everything changes. The dollar has been stronger this week. It's knocking on the door of coming back towards the old highs. Most currencies were down pretty hard. You already know about what's going on with the tankers and everything in the Gulf of Oman, and we've got energy's getting a bid from their recent break lows. I'm not convinced they're in an uptrend though. When we take a look at a monthly area chart of closes, the monthly 18-month moving average of closes is 917.20. We're at 896.60, and the last time you hit an 18-month moving average, just to give you an idea, was back right here because you were above it there. So it was in June of 2018, a year ago, before you've have a shot at coming back up to this. You see where you're at? I don't know if you'll get through the 16 and a quarter, but if you do, then the 17 level is your next resistance point. Will you be able to stay over it for any length of time becomes a question, because just like this, you failed there. Don't know that it's going to. And again, I don't know how bad the situation is for beans at this point. We did hear at the beginning of this week that up to 6 million acres or more, actually I said up to, we're hearing 6 million is going to be lost in the planting, and it could be more than that. So what does this all mean to the market? What I do see is the market has rallied back into a resistance area that it had. And you can see this is a pretty strong resistance area that formed at the end of 2018 into early 19, and that's when the market tanked. Think about the tariffs and the tariff war that went on between the U.S. and China. When we take a look at this week's action, you have a big reversal week. You took out the previous week's low and high. And for the week, we have a range here of 848 to 898. So we have a 50-cent range, which is big. What you don't want to see taken out, and I would mark it on this chart, is you don't want to see this week's lows taken out anytime next week or the week after. If you do, I'll call this a bull trap. So then the question is, where's the support of the market if it takes out that low? If it takes out that low, the problem is there's no moving average under it of importance. So you get a vacuum in the market is what I'm saying. There's some gaps right back here that might end up being the part of the market that is filled. Let's assume the market doesn't go back for that number and it goes up. Well, the trend's already up. You got higher lows, higher highs. The support in the market's 874. As I said, I don't want 848 taken out. One of the numbers the market could target is the 930 level, the 100-week average. We know we just saw the 917 and a quarter. And the Bollinger top comes in 941.5. So what I'm saying is there's room to the upside that goes anywhere from 917 up to 941.5 with different numbers, be it on a monthly chart. And monthly just gives me an idea. A lot of traders do look at the weekly. Most traders don't look at the monthly other than a viewpoint like I'm showing. In terms of momentum, it's up. So the trend up, the bias up, resistance points coming in here from 917 up to these numbers, so strength. In the meal market, the meal did not have an outside week up, so it's got a pattern of a higher high and a lower low. It is not in the same position as soybeans. You're at two very important resistance points right now, the upper Bollinger Band and the 100-week average. What's the importance of Bollinger Bands? Whether it's on a weekly chart or a daily chart, the market will trade within the bands 95% of the time, even the monthly. So that's what you're looking at. And the first challenge of the bands is resistance. Support's back at what I call those lines in the sand, the 18-week moving average of closes. But momentum up, bias up into resistance. In the soy oil market, the market from the looks of it this week had another outside week up. So because it didn't take out this high yet, I'm still leaving the legacy of lower highs, but now higher lows. And when you get that, to me, it's a warning sign. Go to the sideline, Will Robinson, go to the sideline, that old thing. And that's what I would be saying. The market is looking at where you're at. Now, should you take out this week's low, this coming week or the week after, then I'd be targeting this 2607. Let's assume it doesn't do that. Let's assume it tries to break through this 2824. Then wherever the 18-week average is becomes the first resistance. Close over that, and you've turned the trend then to higher lows, higher highs. With the settlement over, you put into play the potential for the 3051, 3071 level. So you've got to be wide-eyed and opened on this market. It is the weak sister of the crush spread right now. In the corn market, classic weather market, a lot of acreage not going to be planted. The farmers are done in most areas. It's going to rain again this weekend in the south, so southern Illinois, Indiana, those areas from what I'm hearing won't be able to be planted, and it's too late. So you're going to get what they call prevent plant parties. I read about one taking place today because the farmers are just going, they have no choice. They got to go to the government and get their insurance. Higher lows, higher highs. It's on a tear to the upside. A lot of traders in this building think you're going to be over $5 very soon. I go in the elevator and as I go to the trade floor to be on TV, and I just hear it. You hear it all the time. And they're extremely, extremely bullish. Does that mean they're right? Not necessarily. For every bull, there's a bear. When you look at the wheat market, got a pattern of the lower low, higher high, you're over the upper Bollinger Band. This market just went from 416 to 544. So the problem is, and we were talking about this in the office no more than 20 minutes ago, that anyone that buys these markets, where do you put a stop in them is your problem right now. You're probably better off in option strategies than you are in raw futures, just naked one way or the other. In the cocoa market, you've got a bull situation. Higher lows, higher highs, you're against resistance, but on the pullbacks, until the red line closes back down under 80, this market still has upside momentum, upside bias, but you've hit upside targets, and you have to pay attention to that, because each time you've been hitting this, you've been getting a sell-off of some size in the market. In the sugar market, we're finally up to another resistance point. We're finally, and I use that word, knocking on the door of the 100-week average of closes. Now, this week's high was 1278. That number's 1279. I'll say we're in that resistance area. You have a lower low, higher high. It's a slingshot, if you will, to the upside. First resistance point, if you continue on, maybe you make it to the upper Bollinger Band. If you pull back from here, I'll look for support at the 18-week average on pullbacks, that 1243 zone. In the coffee, the daily chart turned bearish today. The weekly charts are still bullish. You can see it. Higher lows, higher highs. Support back at the 18-week moving average of closes, but there is divergence. Momentum is trying to turn down on you now. It hasn't succeeded. If it crosses under the blue, it has succeeded. But you've lost upside momentum, and where did it happen? On the first challenge of this upper Bollinger Band, yeah, you went through it a week after, and I know what traders do. They go, we didn't get the high. Well, I think you did just fine. In the cotton market, still in a bearish mode. Lower highs, certainly a lower low. Resistance, well, the resistance comes in at the 18-week average, but you would break the downtrend to get up there because you don't want to see this market get over this right here, last week's high of 69.91. Downside target, 63.65 if the trend continues. In the cattle market, as you see all these feed prices going up, it's weighing on beef prices at the same time. Lower highs, lower lows, still very much in the bear camp. The hog market ran out of steam up here. I think it's trying to make a move back to the 18-week moving average of closes, 76.65, to see if it can find any support. I want to remind you that one of the most important things I think I do in the morning for my subscribers is I put out a morning video. Now think of it this way. I get up in the morning early, I'm looking at Asia, Europe, and so on, and my charts will look this way. I'm not in them. It's very different because I'm able to say buy here, sell there, very specific. I'm going to cover 40 futures markets and about 5 ETFs. I'm assuming you have a trade idea or you're looking for one, got your cup of coffee in the morning, and you're getting yourself ready to go. I try to put this video out in this exact order every single time because you can pull on the player on the bottom. It'll light up and tell you what section you're at, or we'll have a lexicon on the side so that you can just click if you wanted to go to energies. They're right there. Whatever market you want, or you can let them all play in this order. We try to make it really easy. The idea is that I've already seen what's happened in Asia, Europe, and I know the morning reports that are coming out, so I'm able to give you ideas what the trade is looking for, what's going on already in the markets, and I can throw out specifics. I can say, buy here. I can say, sell there, because in this video, it's a subscriber video, different than what you're getting free on our website, different than what you're getting on YouTube and other areas this is shown. That is very important, because if you've got your own trade idea and you're looking to be mentored, if you take it that way, you might say, you know, I want to go see what's going on in that energy, or I want to see what the gold market looks like. What's Ira got to say with it? That's where this all comes in. There's a charge for it, 26 cents a day to get you started. I don't think that's very much. You're committing, if you do it, for $7.95. You can stop anytime you want after that, and away you go. After the first introductory price, it moves to $15, or you can buy a one-year subscription for $156, which is $13 a month, and away you go. You can find out much more about it by going to our website under Research or Education, Morning Subscriber Video. Everything's explained, and that's where you sign up. Hope you do so. I do my best to give you that morning kicker if you want. I'm Ira Epstein. You have a good day.